Moody's Senior Director of Supply Chain Strategy, John Donigian, joins us now. John, how do you get to $2 billion? Because I highlighted some of the estimates that are all over the map, from the Conference Board to Oxford Economics to J.P. Morgan. What are you looking at?
Sure. Thanks for having me this morning. So the estimates are changing. You know, when we went to sleep last night before the strike actually occurred, we were hearing estimates around $2 billion, and that was based on historical port closures from West Coast and from, much less recent East Coast strikes. As we woke up this morning, estimates are getting more dismal, getting into that $4 to $5 billion area per day or per week. And actually, now we're looking at maybe up to $80 million per month if the strike is prolonged into longer than a week or two, which is typically the extent of a strike that happens. So estimates are changing as we speak.
And what are the products most affected? I mentioned some of the retailers with apparel, sure. But what else is shipped to and from these ports?
Yeah, the ports on the East Coast and the West Coast typically handle 50% of the U.S. volume in containers. So when you think about that, there are specific industries based on destinations, such as agriculture, automotive, apparel, and retail specifically. But with such a broad balance of business coming into the East and the Gulf Coast ports, it really will hit every industry, from automotive to industrial to manufacturing. So it's going to be broad sweeping in regards to the industries that it does impact.
I saw an estimate, Bank of America, 29% is furniture and household goods, which is among the biggest. General electrical appliances, also another big one. So how long do you think this will last?
It's a challenge because based on the negotiations, there's a big gap between what the ILA is, looking at offering or asking for versus what the management is willing to go up to at this point. So hopefully it will be shorter than longer, because the impact to the economy could be devastating, especially going into fourth quarter with the holiday season coming up and all of these retailers really in the process of receiving their fourth quarter product right now. It does put value at risk, really is a significant number, because every day that product isn't available on the shelves, that's more revenue that's lost by these retailers. And as we know, they make their year during the fourth quarter. So hopefully it will be short-lived, but it's based on the negotiations and how quickly they come to the table and make an equitable compromise between the two parties.
Well, and also how much pain the Biden administration, the president, is willing to stomach. We're 5 weeks until an election. He's branded himself the most pro-union president in history. I guess that will be tested.
Yeah, it's interesting. I was thinking about that this morning with the auto worker support, what a while back. And now, they're as of this morning saying they will not intervene. So it'll be interesting to see how that plays out. I'm not an expert on White House policy or politics, but if all of the key players are asking for intervention, that should be an interesting response that comes out in the next couple of days.